are such an asshole.
All right, banging them out here one after another at assholeconsulting.com. We have kind of an innocent question here from a cop. We'll keep them anonymous. Currently a W-2 employee as a police officer in a Midwest town. I work many extra security jobs with W-2s, 1099s, and cash under the table. Thought about starting an LLC under an S Corp so I could put together a self-employed 401k. All right, you could do that, or a SEP IRA. Also, if you do that, I presume you talk to an accountant. That accountant will have probably set up that legal structure to lower your employment taxes, which isn't sexy, but you know, every little bit counts. So you must be working with someone who knows what they're doing, probably even more than I do. Other than that, are there any advantages about starting up the LLC so I could 1099 myself? Some said that I'd be paying higher taxes under a 1099 instead of a W-2. I already have a retirement plan and benefits from my full-time police job, but trying to get the best out of some side hustles, including but not limited to security jobs. If I start my own LLC, I would also get liability insurance with umbrella cover. You could get an umbrella business policy or some liability insurance. Just talk to like your insurance guy, whoever you get like your car insurance from, or your homeowner's insurance. And that would, you know, I don't know, a couple $100 a year. Well, I guess it depends what you're doing. Now you're working security. Their actuaries might have a little bit something different, but it's not a bad idea to get an umbrella policy. But going back to this, you seem to misunderstand how 1099s work. When you set up an LLC, and you only need to set up one, you set up the LLC as the entity by which you are self-employed. That's now your business. And you set up an LLC, not just to create a business, because you don't have to. You could just go as a DBA, just your own name. But setting up the LLC also creates a separate legal entity. So if people want to sue you, they sue the company and not you. You take the money out of the LLC so it doesn't have any assets. They even go to the extent of they'll set up two companies. One is a holding company. The other is the operating company. So the holding company owns the operating company. So if they sue the operating company, oh, but that's not who holds it. The holding company does. And that's like, oh, well, then you own the holding company. So there's like 3 levels they got to go through. So there's something to do, you know, that's something you could also consider, but I wouldn't get there that far yet. But you set up your LLC to provide a separate legal entity for legal protection, but also just clearly defines that as a business. The corporate structure where now you have the S Corp own the LLC, you would do that so you pay yourself, and Chad explained it to me one time, but you pay yourself a salary for you to manage the LLC, which is all legal, and somehow through the magic of accounting that lowers taxes. I don't know how, but it does. Not a lot, but it's worth doing if you have enough income coming in. So you're probably going to want to talk to your accountant and find out what that income level is. It's not terribly high, actually. I'll tell you, this is a pain in the ass, just so you know. But you already have it under an S Corp, so I'm going to assume you have a pro working on this. Once you have that system set up, you do not 1099 yourself. Unless you are an employee, in which case you will W-2 yourself. You don't 1099 yourself because you just have to declare that now as a single member LLC. Right? That's going to go straight to your taxes. Also, I don't think you understand. They're going to 1099 your LLC. So any clients you have will pay you. And if they pay you more than $600, they should send you a 1099. You're going to have to fill out now, this all depends to begin with. If you're doing this for cash under the table, they're not going to 1099 you because they don't want to deal with the paperwork. It's not even about avoiding taxes. They just don't want to deal with the paperwork, probably. But if you have a client and you're going to do more than $600 worth of business and they got a serious professional accountant or they have some accounting methods, they're going to say, we need you to fill out a W-9, which basically means we're going to give you a 1099 later on. You're a contractor. It's basically telling the IRS that we've hired this LLC or individual under a contracting basis. And if we pay him more than 600, we're going to report that to the IRS, and then they should report the same. And we'll hand you off a 1099 at the end of the year for tax purposes. And so you would not 1099 yourself. Your clients will 1099 you. And then you take that money, you add up all your 1099s at the end of the year, and that's your gross revenues. And then you subtract out all your expenses. Some say I would pay higher taxes under a 1099 instead of a W-2. And I'm trying to figure out, is that because you're paying yourself as an employee under the S Corp LLC situation? In which case you would have but even then, the majority of your income is going to come from the 1099. Your W-2 income is just what you're going to, and your account will recommend how much to pay yourself based on your total revenues, what to pay yourself as a salary for managing your company. But that is not where the lion's share of your money is going to come in. It's going to come in through 1099 work or contract work. And so I don't see how that's going to really result in higher taxes. I will also say, having worked 1099 income for quite some time, exclusively of which for coming up on 10 years, my taxes are lower. Now, a lot of that also has to do with me being a single guy and having no kid. If you're self-employed and you have kids and a wife or a spouse, the healthcare, forget taxes, healthcare is going to wipe you out. So that's a huge thing, but it doesn't sound like you got that. But as an individual, I have saved more on taxes under 1099 employment than I would in traditional employment. And the reason why is you can write off all these other things that you can't write off as a regular salaried employee. For example, when I drive to, do a podcast, or I drive to the Walmart to pick up some office paper, my cell phone, computers, because I use that for work, I get to write off the lion's share of these expenses that everybody else would have. Like, you got a computer, right? Everyone gets a personal computer. But since you're self-employed, and assuming you use it for the majority of business work, which obviously I do, you get to write that off. Cell phone, everyone's got a cell phone, but as a self-employed individual, you get to write that off, or at least part of it. And when you stop and think about it, and this is just my opinion, one of the biggest benefits of being self-employed is if you look at when you go to traditional work, a regular 9-to-5 job as the employee of somebody else, there are a lot of expenses you incur doing that. Gas, transportation, insurance, and all that within reason, because you don't want to go to jail, becomes a tax deductible expense. Because if you sit and think about it, a lot of effort, resources, and energy you expend going to work. I'm just trying to think of something. Yeah, really boring stuff like a stapler. A stapler is tax deductible because I have to use this for work the occasional time I'm going to staple something. Traveling, if for whatever reason I got to go to a seminar, or I go visit DT and we do a podcast, would you have incurred that expense had you not had a business? Another thing is, for example, promo. You have to keep up your reputation. So when I go out and I do adventure and hiking and motorcycle riding, I don't want to take pictures. I don't want to climb this mountain, take pictures. I don't want to I just want to kind of enjoy and relax. It's like, hey, can I write off a little bit for promo? You get establish your reputation. I'm not some neat hiding behind an avatar. My account, you can learn. Yeah, we can take a percentage because you wouldn't do that. Had you not have this job, you probably would have just gone there on that ride and not driven all the way up to Alaska. You probably would have just gone here, or you probably would have just climbed that. So there's a fair amount of leeway. Again, talk to your accountant, find out what is and is not deductible. And once you take in the totality and you realize, wow, there's a lot that goes into doing a job, whether self-employed or traditionally employed, those tax deductions, in my experience, have been more financially beneficial than getting paid in health insurance. I still paid taxes when I was a W-2 employee. Usually, when you're a W-2 employee and you have 1099 income, how much am I writing in tax? There's that. But what else was I going to say? Oh, and even the health insurance, which is not necessarily a tax. I found self-employed, like when I worked, last place I worked, they said, okay, well, your health insurance Just so you know, because they got to brag about how much they're paying for you. We're paying $300 a month in health insurance. And I knew back then, this was before Obamacare. I'm like, dude, I can pick it up for a fraction on the free market. I don't need this full Cadillac service. I'm healthy, unlike you fat pieces of crap, because it was Wyoming after all. Said, why don't you just pay me that money or pay me out? I think even said, look, just give me half that money. You'll come out ahead. I'll come out. No, we can't do that. No. And so they ended up paying me $300, but it really wasn't $300 a month for me. You wonder, like, well, how is it Aaron could get it for like $90 a month on the free market? They're paying me $300. It's because they needed me in the pool because there are so many older employees, and that's what it was basically, well, you're young and healthy, so our pool risk will go down, but we're still going to claim we're paying $300 a year. They're like, That's why the insurance company insisted on that. But even self-employed right now, I shell out just shy of $300 a month for my health insurance, and it's a catastrophic health insurance policy. They pay that for a W-2 employee. And you could always go and say, but just pay me the cash. I'll go, oh, no, we can't do that. No, that indicate we care. So even their unless you had a family, which makes a lot of sense, because then insurance does play a role, especially with dependents. But if you're just a solo dude or a solo dudette, and you're healthy and you just want to do catastrophic health insurance, even the insurance isn't compelling enough to go be a W-2 employee. So I in general like what you're doing, setting up an LLC, you're monetizing that, getting that all official and squared away. Have good accounting controls, good accounting methods. Save your receipts. Write down why that's a tax-deductible expense on your receipt. Organize your receipts. Put them into a spreadsheet. Do your accounting. Have all these good accounting controls in place. Talk to your CPA. Make sure if you have a question about, he could probably give you a spreadsheet or something to use. But I like that. I mean, it's, you'll get to write off a couple things you normally wouldn't have. Of course, now they call. Of course. And that's about it. Hang on. Let me mute this. No super chats. That's it. See you, Toodles. Bye.